I'm sure most people are aware of the trends that are happening across the African continent. We have a huge amount of infrastructure spending that's happening. There's a lot of urbanization that leads to increased demand for goods and services, and also allows companies to have economies of scale that are providing those goods and services. At the same time, we've got emerging African consumers of a sort of middle class status. That's important because they start consuming different types of goods and services. So what we look at when we look at Africa is the effect of these trends might have on certain companies' earnings. And so they are really important because they do happen. But ultimately, when we invest in a company, we look at where it is trading as to what we think its fair value should be in light of all these trends that are happening. And so we invest in shares where we think there's upside, and that's how we aim to generate returns for our investors.
Well, if you look at the countries we look at, they're basically very independent. They have different economies that are at different stages of development. So to us, we didn't think that there should be a huge correlation, but we decided to run the numbers. And if you look at the correlation over the past 10 years of Africa to developed markets and Africa to GEM, it's actually below 0.5. But if you look at the correlation between GEM to the developed world, it's much higher at 0.83. Even in 2008, when correlations became much higher, the correlation of Africa to developed markets didn't even reach 0.5. Well, what it allows us to do, for instance, is we have invested in a cement producer in Kenya. We've invested in a carpet manufacturer in Egypt and a bank in Nigeria. So each of these companies will have different macroeconomic drivers and different company drivers.
I think if you looked individually at shares and you looked at what share prices of an individual stock does, then you'll find that they are reasonably volatile. But because of the diversification, and Kathy's mentioned some of the stocks we have in the portfolio, and because of that diversification we have across different economies and different sectors, we find that the overall portfolio is a lot less volatile than you might think. And we did some work to test this, and if we looked at the Africa X South Africa Index, and we looked at its weekly earnings volatility, it compares almost the same as the S&P 500. So in fact, the volatility of share prices as a whole across Africa are not too dissimilar to what we expect to see in the rest of the world.